Hey everyone, you might have seen the headlines. Mortgage rates up 6.9%. According to a CNBC report that just came out today. I did a short video on this, and the way they're showing it is there's been a dramatic drop in mortgage applications and a dramatic drop in refinance applications over the last 2 weeks. If you're following the markets, you've seen how volatile they are, and I think that's been a major factor in this and people's choices. But today, we're going to look into this and see, is this really as dramatic and as serious as they're making it out to be? Is it that much of an impact on your monthly payment? We're going to dig into that next. So let's break this down. While that CNBC headline report made it sound like it's doom and gloom and a dramatic change, yes, there has been changes in the amount of applications and refinancing just in this last 2 weeks. Is that going to change coming up? Yes. As rates change, demands are going to change. So I think this report makes it out to look as worse than it really is. But I'm going to share with you what a 0.1% difference makes in the mortgage payment so you can determine for yourself, is this as dramatic as they're making it out to be? Now, the example I'm going to use is a Lake Anna home with a median sale price as of March 2025 of $585,000. If you put a $20,000 down payment, you would be financing about $468,000. Now, the report is saying that we've had a dramatic drop because of this price increase, which insinuates that increase makes a major difference. But I'm going to show you the difference. At 6.81% where it was, your payment would be $3,053 a month, principal and interest. When it increased to 6.9%, the difference is a $32 a month increase in the payment. That's it. The course of a year, you would be spending $384 more for that year. Now, if you find the house you absolutely love and it's here at the lake and it's what you want, are you going to let $32 a month change your mind? $384 a year? And over the life of the loan, it's $11,000 over a 30-year term. That's not nearly as drastic as the headline suggested. I'm going to give you a strategy that you can use, actually two strategies, that should help counteract this small difference, and even if it was a larger difference in the interest rate. Now, my first strategy is just pay a little bit more towards the principal every month. It doesn't have to be a dramatic amount, just something you're comfortable with. So by paying a little more towards the principal each month, you're paying off the loan faster. For example, let's say you increase your monthly payment by just $50. Here's the magic. The extra $50 a month goes towards that principal, which reduces the loan balance faster. Now, over that 30-year life of the loan, you would be saving $13,000 in interest by paying just $50 more a month. That's a pretty huge savings. And it's a simple strategy to get you ahead of rising rates while also paying off your mortgage faster. Now, my second strategy, timing your refinancing when the rate drops. Now, let's take a look at this. I use this strategy for a primary home and I use it for investment properties. Even though rates are higher right now, they won't stay that way forever. Refinancing can be a great way to lock in a rate when the market shifts in your favor. So when is the right time to refinance? I have a general rule of thumb. Once that rate is 0.75 to 1% under the rate that I financed the home for, that's when I'm going to refinance the home. For example, if I found a home that I liked and I financed it at 7% and then the rates come down to 6%, that's when I'm going to take a look and see the difference and if it's worthwhile to refinance the home. You could potentially lower your monthly payment, reduce the interest that you pay over the life of the loan, and even shorten the term of the loan without drastically increasing your payments at all. By paying a bit more each month, you reduce your principal faster, which cuts down the amount of interest that you're paying in the long run. By financing when rates drop, you can lock in a better rate and save even more long term. These few simple strategies can help you stay ahead of the game and make sure that you're paying the least amount possible over time.